Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you the strat, but to teach you how to profit from the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Rob in the Black on Twitter, and at sepiagroup.com. So yesterday, we talked about the broader market and opportunities on DoorDash, which I'm going to show you and did not trade. But we said yesterday was our 3-day flip, and we had gone to looking for, yesterday, a couple days ago. Yesterday was our 2-day flip. So we're looking for a 2-2 continuation to the downside. So we had our move on July 11th. This is our SPY. We had our 2 down here in July 11th. Yesterday we had our 2-day flip on the 12th. So our goal was to find opportunities to the downside. So we're looking to short the market. So it's SPY cross back below some of our levels we had drawn on our monthly and targeting this area here around 378. But it's early and we're still waiting for almost an hour before CPI numbers come out. So with that in mind, market seems to be trading a little higher from the close, not much, but again, we had our shooter here. Today is day 2 of the 2-day, day 3 of a 3-day, right? So our next flip happens on tomorrow, 2 to 3-day flip. So depending on what happens with CPI numbers, guys, the market could certainly try to reverse this day, and excuse me, and go inside or 2 up. So let's be careful with that. Given that CCI on the daily is in what I call my buy zone, it's certainly a possibility, but it's still weak. And you look at we're green on the we're red on the week, right? Still the month, we're higher, right? July 1st was here, so 279, 278.95. It'd have to go to that level to turn the month red, right? So with that, we're in conflict. Okay, so we're red on the week. We'll see what happens today. You can see where we are here from our little legend. We are inside month and up, inside quarter and up, and of course we're down on the year. All right, so we're in conflict right now. So if you're day trading, what you have to understand is when you're in this choppy mess, when you're in conflict with the market, you have to either decide, yeah, I want to trade this, or no, I don't. And if the answer is yes, then let's figure out how to trade it. And so I'm going to start with the Qs, and then we'll talk about Tesla, which I did trade because it looks exactly like the Qs. Now, I mentioned yesterday that I was holding Tesla long. I'm sorry, holding it short. I had a 17 put on Tesla yesterday. And I will tell you why that was not my best move, but I held it. When we ended up with a small profit, and that's okay. But here's the open. All right, so we draw broadening formations, right, on our 90. And I'll just blow this up a little bit so you can see how the 90, you can see how I drew that. So this was the high of the range. I didn't go way back like I normally do on the upside. I was looking to trade this short. So I just drew this from the high of this day to the next low in this bar, which was the low of this candle here. But technically I would have gone way out here. I was lazy, and because I was not planning for this to go higher. And then I drew this from the high of this candle to this next highest candle inside this range. And that probably could have gone, maybe to this guy here. But here's where we were looking for really for the cues to try to avoid. And I'm going to show you where the opportunity came in though. Here was the low of the day, right? So what I like to try to do on this is I like to draw the low of the day, the high of the day, in what I call kind of my midpoint if there was a 2 up inside this range. And in this case, it was. If there were no 2 up, I would be, we'd be looking at a, for example, a 2 down, 2 down, 2 down, 2 down. I would not have a midpoint inside that range. But wherever you have a 2 up, that is another triangle. So that's why we draw this line, okay? So in this case, we had a 2 down, inside, 2 up, 2 down. So we want to cover this 2 up bar here. And the idea is we want to be short below this range here, right? So this is a 2 up, because this is the day we're trading. This is a 2 up, so we want to short the cues if it trades below this range, this being our first target and this being our next target. And you can see I drew this here off of this outside bar because we figure if price was going to, remember this is a 2 down, this is a 2-2 continuation, it had to take this range here. And so that's why we drew the broadening formation from this outside bar here. All right, so now how do we trade this? Here was our open, and I'm just gonna blow this up because it'd be easier to see on a 3-minute time frame at the open, and then we'll flip back over. Tesla did exactly the same thing, guys. It gapped up, and you can see our CCI trading up. But remember, we had a 2 down here, so I'm not looking to trade this long in here because this was a 2 down candle. I need to trade to the upside on for continue or for reversal. But what it did do, and I'm waiting for my 18-minute flip or 15-minute flip, is it traded to this line and then reversed. Had it not reversed here on this 3-minute, I would be looking for the 18-minute flip and a continuation using both CCI and on the 3 and 18. But it reversed here, all right? So this was that mid-level line I just talked about on the 90-minute. And this, so if you look at it, you have a 2 up, an outside bar, a 2 up, a 2 up. Here's your reversal. Here's your reversal, 2 down. CCI start to cross back over. This is your 15-minute flip. You could have taken that. Soon as it turned, so yeah, I would have waited to the 15-minute flip because in this case, it did not turn the 15-minute red here. Here's your flip. Now you have a shooter. We'll flip, I'll show you what that looked like. You have your shooter, right? You got this nice shooter here. I am absolutely looking to short here. Here's your 15-minute flip. It crosses back over to the red zone on that 15-minute flip, guys. 18 was very similar. You almost have a graveyard doji here. Open close nearly even. You have your doji here, 18-minute flip, and you can see big potential to take this short. And so I share that because we're not always waiting for the price action to close below this level where we say we're going to go short. You got to look for those opportunities when they present themselves intraday. Since this failed, right, to trade higher, we had this fail here to trade higher. Now we're looking for this to go short. Remember, you're still inside day here. This is still inside day. And my preference is for price to trade up and then back down into timeframe continuity. This was a big red day. So if you were looking at this on a daily chart, right, you had your 2 up, you were 2 down on this day. It traded all the way up here. And then we got our 2 down continuation. We love to see those moves, right? I prefer them over a gap down continuation. Why? Because this now becomes your range. So you had this outside bar. You had this 2 up, 2 down. I probably would have taken it there. I did not trade this, but it was on my list. I'm going to talk about Tesla. But Tesla looks exactly like this. All right. This is where I would have entered. Now I have my range here as this outside bar. As this is crossing back over, you have your 15-minute flip. You have your shooter, continuation, and you take this price, the trade down to your target. As long as it stays below this range, you're good, right? This is our broadening formation for the low of the day. It comes inside. And when I see this come inside, CCI crosses over. You see that here? CCI crosses over. Price trades inside off of the 18-minute flip. All right, right here. I don't like that. So I'm going to avoid those inside 18s and I'm exiting my position. And if you'll see, it traded inside and we never really got that cross back to the downside. And you see here on the Qs, hasn't crossed over yet until here, but you can see it trending up. And so the opportunity was right here in the first 30 minutes of that trade. Okay. But again, where do you enter? You have to understand what's happening in this market. It trades up to this level. This becomes a level of a resistance for us, right? This is our 90-minute trend line here. I'm going to take this all day and use this topper as my stop loss because it hit here and failed. CCI is crossing over, use this topper as your stop loss, get in there. Manage your risk by position sizing. All right, you're in profitable situation. If we had another 2-2, maybe we could have added. We'd never got another 2-2 on the 3-minute, guys. So you have to get in there and take your opportunities when they present themselves at the open. Again, my goal is to make the bulk of my money in that first 90 minutes of trading. Now I'm going to flip over to Tesla. Keep Qs in mind because this was the next move. If you had missed all of the first 90 minutes, maybe you work or just don't have time, then it goes inside. I don't care for this. I don't care for this. Now I'm looking for a potential move to the upside off of an inside bar or to the downside. And here we had a 2-1 fail 2 on the 90. I'm going to tell you what I did on Tesla and lost here, tried to jump it and lost money. Not much, but we lost. And then catch this move to the downside. And so this is why I prefer the 90-minute flips because I don't do a lot of trading, guys. I don't have trade high volume, so I'm not getting the volume discount on my options like I hear some of the folks. And I'm okay with that, right? I'd rather have a handful of quality trades than to be jumping in and out of the market all day long. For me, it's just very stressful. So I'm waiting for my 90 flip. Got triangled out, and I'll show you where that happened because I saw this move, and I was like, yeah. But Tesla didn't want to cooperate. We had a lot of TTOs on the 3-minute, and I got triangled out before it finally broke. And so we'll show you that now. Okay, so let's go back here and you can see again, same deal. Does that not look exactly like the Qs? I mean, like to a T. But here is the difference though. I was already in Tesla long, short. I had my 710 puts and I endured this, guys. At one point, I'm pretty sure my option was down $800 and some dollars. This is the risk you take when you decide to hold your options contracts. It was not a great move on my part, and I was fortunate that the market did what I had hoped it would do. But yeah, probably not a good move, because had I not, because I saw this and I wanted to take this entry right here. You could see that cross back over, and then here's the 18 flip right here where it turned the open, where it turned the 18 red, and I was going to enter. And then I said, you know what? You may be holding more risk in this small account. Maybe you don't do this here. So I held off. But let me say, if I had not already been in the trade, meaning I wasn't holding it overnight and down $800 over here, I would have entered here, and you could see this would have been, even if I had bought the 710 puts, I would have gotten a much better price, right? Because I have held it overnight. So this is really my message. It's not worth it sometimes to take on that risk when you know, and this is, Rob would teach this when I was in his class several years ago. He would say, no, I this is not one where I would hold overnight, because you're going to get an opportunity the next day. And he's exactly right. And so even though, and if you look at this here in the daily, I said, yeah, I think this, day one on a 2-day chart, 3-day chart, big red bar here, we get a 2-2 continuation. And so I took a risk. I probably won't do that again in this climate, right? Because there's just so much volatility. But I would have gotten a much better entry and much bigger profit, because from when I looked at this, I probably waited till this turned red. So let's say I gotten in around here. That was right at what the open was, 710.43, guys. I'd have taken that same 710 put and held it to where I exited it down here somewhere. Can't remember exactly because I was on a different chart, but I exited down here. I think I exited right around here. All right. And so let's call that 689.90. Okay. So that's a $20 move, guys. Instead of, I think I was maybe 580 or so in that contract, it could have looked more like 1,000. Okay. And so that's really my point. I would have gotten a much better price had I waited to the next day to take my entry. All right, so I won't go into any details on that, but because like I said, it looks exactly like the Qs. I stayed out of this inside 90. I just do not trade this, guys. There was an opportunity maybe to scalp something here, right, in this range right here, once price crossed back above at the top of the hour. So you can take moves at the 90-minute flip. I didn't do that, but here's where I got greedy. I was looking at the Qs and I tried to jump this. We had this inside bar, knowing I was violating my rule because this is in the red zone. But I was thinking, okay, maybe we can get a move to the upside back to this midpoint line. Yeah, it didn't happen. I got triangled out like in the next candle or so. I tried to jump it here right before the 90-minute flip. This is at 151. It traded up, traded down right at 157. And here we go on the 90-minute flip, and I ended up losing money. So had I waited for the 90-minute flip, I would not have lost that money. And then maybe I would have taken this short here, right, with this being my stop. So here's your 90-minute flip. You got 2 down candle, but it just too many. You can see here I got triangled out a couple times trying to trade this short, and I lost money. I actually did get in here. Phone rang, I answered it. It triangled me out. I lost money right in here. So just me trying to chat and not pay attention. Then I got in another area somewhere. Oh, right here. I got in here. I tried to jump this. I saw this 2-2, and the 2 down, the low was 699.20. This went 699.22. I got in on this candle and it traded up. And I was like, are you kidding me? And so got triangled out again. All right, so ended up giving some of my profit back from that overnighter, and then I made it back right here. Some of it I got in right here. It came back up again, and I was trying to decide if I was going to hold it overnight. I should have exited earlier. I would have made a little bit better profit. But those are the decisions you're making throughout the day, whether or not you're going to hold or exit. Here, I could have exited because it met my target, but I was debating on what I was going to hold it again overnight. It was a bad move. And then I saw this and I was like, yikes, let me get out of here. So ended up getting a very small profit. Let's talk about Dash. I did not trade this. This was, again, you see the market, very similar. So I was in Tesla, so I didn't catch this, but guys, again, does this not look like the broader market? Again, it traded up to our level here where we said we want to go long above this range, but remember, we're waiting for that 15, 18-minute flip, which happened here. Our 15-minute flip happened here, and we can see this shooter form on the 15-minute chart. We had the shooter here. Well, we're not going to go and take it here unless price CCI stays above 100 and price trades back above this level, which is our, if you look at our above 73.10. So it traded up in that first 15 minutes, came back down. So this is why we wait for that 15, 18-minute flip. Now I'm looking to go short. So if you were in this trade and you waited for that 15-minute flip, you would not have gotten caught in this range. We're waiting, 15-minute flip, shooter. You can take that, you have this 3-2 below this level, you can take that down. Here's your range on that 15-minute flip. Remember, you have a shooter. You're looking to take that out. It does, comes back up some, right? You're still inside this 15-minute flip, bottom of the hour here. It hits this target, which is our low of the day. Now you have a decision to make. What's happening here? You're looking at your 15-minute flip. It's coming back inside that range. It's okay. Take your profit and let's wait to see what happens next. Every 15 minutes, I'm looking for what's happening next. If you're looking at, now keep in mind, I have my 90-minute broader range where I'm trying to see how the broader market is looking. You got your daily, sometimes I'll throw up the 4-hour, especially when it gets time for the flip. And so we're just looking to see what the market is telling us. And every 15 minutes, I'm looking at this and saying, okay, is there a continuation? If price starts trading back inside that range, I know that there's not a continuation. We have to wait. You have this 2 down that closed inside. That's a reversal signal, okay? Because the next 2 has to then take this level out because it was a 2 down candle, but it closed inside this previous range. That's potential reversal, and you can see what it did. And you're just waiting. You can do some scalps along the way if you're comfortable with trading those, right? But in my case, I prefer not to, and I'm waiting for the 90 flip. Right, it's got to break one inside 90. Big range, this 15-minute bar is your range. Doesn't break here. There's a lot of noise inside here. Then you have your 90-minute break. It trades down, comes right back up. How frustrating. And that's how I got stuck in Tesla. Let's see what that looked like on the 18. You had your outside bar here. And it went 2 up and it went 2 down. And I got triangled out on that before it finally broke at the 254 hour. And again, you can see that on the cues, right? That's how I got triangled out. The cues traded much better because it traded 2 up versus 2 down. And so it didn't go 2 down until the 90. And so you had a better range right? Because it traded 2 up versus Dash and Tesla didn't trade so nicely. It went and it stayed inside. And so now you had to manage this, you try to take that level out at at the 2 o'clock hour. Inside here, you trade that, comes back up. That's exactly what happened to me at Tesla. Got triangled out. Now you're waiting for another opportunity. So I did that twice before it finally broke. So that's the nature of the beast, but you're not holding these guys. You're in and out, just trying to catch those moves before it finally broke. All right. It's CPI day, guys. I'm gonna look at the broader market again. I don't have anything on my screener. I think the market is just quiet. It's waiting to see what our next move will be. Tech stocks are getting hammered. And I think there's still some room to go. I mean, you just think about some of the valuations on some of those companies during the pandemic. So we'll look at the Qs again. So let's just say, hang on, let me see. Let me look at the Russell. I mean, so on the Russell, we had this doji yesterday. This certainly could be a potential reversal to the upside. So let's see what happens with this market. But let's chart the IWM. I haven't charted that in a while. I used to trade it a lot. Because here's my take. If the CPI number doesn't come out as hot, then the market may look at that favorably, thinking that the Fed may not have to raise rates again another 0.75 basis points. So we'll see what happens. We have another half hour before we get the numbers. So what if we did something like this? So this is the high of the day. So we're going to draw this broadening formation from the high of the day to the next highest candle in that range. And the low, right? So we're going to draw this broadening formation like this. But remember, this is a 2 down doji. So we want price to trade above this range to continue, right? And then it's got to take this guy. So high is 174.97. All right, so what I'm looking for is if price trades above this range, high of the day, then we got some upside here and potentially even higher. This is a 2 up here to this candle, so that would be my next level there. And then the high of this day here. All right, so 176.99. Wow. And it's actually equal. All right, so that's how I look at IWM from the upside. I mean, from the 90-minute range. If it trades above yesterday's high. So remember, we have a 2 up, 2 down, 2 down doji. So we want this to clear, right? Trade above this range to go higher. This will be our next target. Or trades below this level. This is a 2 down candle, guys. So it has to trade below. This is your 2 up. This is your 2 down. So I don't want to get stuck in here. I like for it to trade higher or lower for us to look for an opportunity. But let's say CPI number comes out. Again, I wait for my first 15-minute flip anyway, so I don't have to tell myself this. But for those of you who like the jump out, CPI is what they call high impact headliner that could really impact the open, right? So if you look at, which is, I don't know if I've ever shared that with you guys, my daily FX. The reason I use daily FX is because I used to trade FX a lot, and I just love their economic calendar, so I still use it. And so you can see they talk about the impact of the headline news. And so I'm most curious about anything that's high and medium, not so much the low impact ones. You can see there. So we have core inflation, right? And they give you kind of the forecast and the previous. So this comes out in the next half hour, right? Bank of Canada comes out at 10. FX is having a major impact on our global economies. High dollar could certainly impact some of our US based companies, right? That trade, that do business globally. And so you have to think about the impact of FX as well as everything else that's going on, you know, the supply chain, the Ukraine war, you know, just economic supply and demand. FX is also a big component. So I still follow that foreign exchange. So anyway, so what we're looking at and is on these smaller caps, though, don't have much of a global presence, may not be impacted as much depending on the nature of their business. So we're just going to look at this, wait for the 15-minute flip, because CPI numbers can come out hot, trade up, and reverse on us. Okay, so just be prepared for that reversal. And of course, if it trades to the downside, it's got to take out the next two. So it's got to take the low of this range, and then it's got to take the low of the following day ranges as well. Okay, so that's this day here, and you had this big move here. So we had two ups, two ups, two ups. We don't have any no two downs on this day. We had an inside bar here, so I'd be looking for price to take this range here. All right, so this was a two up, this is an inside bar. If price continues to trade lower, looking at about 167.30 ish, this range here, if it trades lower. Okay, so so basically needs to, I won't write it up, but it needs to trade outside of this range here, because again, this is a doji on the daily, right? So it needs to either trade above this level here or below this level for me to be interested. If it trades up to this range, like the Qs did yesterday, and we have an opportunity for a reversal off of these levels, I will look for a reversal off of these, the broadening formations there. Okay, dokie. All right, so I'm going to wrap it up real quick with our Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who's hasty comes surely to poverty. I just, yeah, 15 minutes, guys. Give yourself first 18 to gauge what the market is telling you. And if it's bouncing around off of your broadening formations, then it's probably telling you it's going to reverse. So just be careful. We're not trying to go to continuation after it's hit your range. Okay, wait for the next flip and potential reversal. Okay. Well, I appreciate everyone joining me today. Thank you so much. We'll end it there and we'll see you again tomorrow. Take care, everybody.